Today, we're diving into the stellar start U.S. stocks had this December. Honestly, it's nothing short of breathtaking. Both the S&P 500 and Nasdaq have hit record highs, powered by the strength of tech stocks, while expectations surrounding the Federal Reserve's policies have reached new heights. Let's face it, whether we're talking about policy or fundamentals, investors right now are brimming with confidence. Let's kick things off by looking at how the U.S. stock market has been performing. Since December began, the S&P 500 has set its 57th closing high of the year, while the Nasdaq has broken records 36 times this year. Incredible, isn't it? Driving this impressive performance are the tech stocks, which continue to shine brightly. Take Tesla, for instance. Its stock surged a whopping 10% last week alone. That's insane. Another example is Salesforce, whose stock jumped over 9% in a single week, thanks to a revenue boosting its better-than-expected Q3 results. These companies aren't just tech industry stars. They're the powerhouse engines of the entire market's momentum. At the same time, we're seeing capital pouring steadily into U.S. markets. The latest data shows that investors pumped $8.85 billion into U.S. equity funds last week, making up a staggering 45% of global market inflows. In other words, investors worldwide are betting big on U.S. stocks, especially the potential of tech companies. This influx of funds clearly reflects a market brimming with confidence in future growth. Now, here's a question that might pop up. Is this stellar market performance tied to the Federal Reserve's policies? The answer is a resounding yes. Recently, Fed Chair Jerome Powell and other officials have been in the spotlight, and their statements have drawn a lot of attention. Powell's speech last week was cautious, but the message was crystal clear. A rate cut is highly likely. He mentioned that while inflation hasn't fully reached its target yet, the Fed is making progress. He also expressed optimism about the job market, noting that the current data remains strong, providing more room for rate cuts. Powell emphasized that the Fed would take a patient and measured approach, gradually pushing forward with rate reductions. These statements have undoubtedly injected fresh energy into the market. Futures tied to the federal funds rate now show a 90% plus probability of a 25 basis point rate cut in December. Essentially, the market has already priced this in, and many analysts believe this rate cut could further fuel the stock rally. For example, Morgan Stanley analysts noted that while the recent rise in unemployment suggests slower hiring, it doesn't indicate mass layoffs. In other words, the U.S. economy's fundamentals remain robust. Of course, policy adjustments will still depend on upcoming data. Take U.S. Treasury yields, for instance, a metric highly sensitive to market dynamics. Over the past 2 weeks, long-term Treasury yields have declined, easing market tensions to some extent. However, if yields start climbing again, this could prompt profit-taking by some investors, especially those who jumped in at higher levels. Looking back at last week's performance, the market did show some divergence. While the S&P 500 and Nasdaq dazzled, the Dow Jones lagged behind, weighed down by weaker performances in healthcare and industrials. However, if we look at capital flows and sector trends, it's clear that growth stocks remain the market's darling. Sectors like tech and communication services saw significant gains, demonstrating investors' strong preference for areas with higher growth potential. So, what's next for the year-end rally in U.S. stocks? Historical data suggests that when the S&P 500 has risen more than 20% in the first 11 months of the year, December usually performs well. Analysts estimate a 78.6% probability of a positive December this time around. In short, history seems to favor a bullish outlook for the year-end. That said, it doesn't mean there's zero risk. Current market valuations are nearing historical highs, which might make some investors wary of a potential pullback. Beyond the stock market, let's not overlook the crypto space. Bitcoin has been on the rise recently, largely fueled by optimism around favorable regulatory policies. At the same time, heightened speculative activity in the market has further pushed up prices. While this trend may not directly impact equities, it does reflect a broader risk appetite across markets. To sum it all up, the market right now is a mix of opportunities and challenges. On the one hand, strong tech performance, steady capital inflows, and clear policy expectations are solid tailwinds for a year-end rally. On the other hand, shifts in treasury yields and potential profit-taking remain risks that we can't ignore. All right, that's all for today. If you found this analysis helpful, don't forget to subscribe, and hit that notification bell so you won't miss any of my future videos. And hey, if you've got thoughts on the market or want to share your predictions, drop them in the comments below. Thanks for watching, and I'll see you next time.